They say an empire isn't built by soldiers. It's built by accountants. It's the year 33 AD. Rome, capital of the known world, is silent. Market stalls are empty. Banks are closed. Senators whisper in marble hallways as crowds gather in panic. The greatest empire on earth has run out of money. Not gold, not grain. Trust. This moment, known as the credit crisis of 33, is one of the earliest financial meltdowns ever recorded. And yet, almost no one talks about why it happened, or the secret financial machinery that quietly powered Rome for centuries. Today, we're going to open that vault. Because behind the emperors, the battles, and the monuments, there was a hidden system of credit, debt, speculation, and shadow banking that held the Roman world together, until it didn't. To understand Rome's money, you can't start with coins. You have to start with people. Imagine a young merchant in Antioch. He trades in silk, spices, and glassware. His entire livelihood depends on one dangerous thing: moving goods across thousands of miles, through deserts, seas, pirates, and politics. He could carry sacks of silver. But silver is heavy, it attracts thieves, and it slows everything down. So instead, he goes to a Roman banker. Not a grand institution, just a man at a wooden table, with a wax tablet and a reputation for being trustworthy. The merchant hands over his money. The banker records it. In return, the merchant gets a note, a promise, a portable piece of trust. With it, he can travel all the way to Rome, present the note to another banker in the network, and receive the same amount of money, minus a fee. It's banking, without a single printed bill. Credit, before modern finance had a name for it. Rome created one of the earliest forms of international banking, powered by contracts, local lenders, and a class of financial middlemen called argentarii and publicani. These people were the hidden arteries of the empire, silently pumping capital from one end of the Mediterranean to the other. But trust is fragile. And Rome's financial system had a secret. It wasn't backed by the emperor. It wasn't guaranteed by the state. It ran on private lenders, wealthy elites whose fortunes came from land, slaves, and political connections. If they panicked, the entire system trembled. This brings us back to 33 AD. At the time, Emperor Tiberius was tightening laws on lending, trying to rein in corruption. But his reforms triggered something unexpected. Wealthy Romans suddenly called in their loans. Debtors couldn't pay. Lenders refused new credit, and the financial network seized up, like a heart stopping mid-beat. The crisis spread everywhere. Property values collapsed. Merchants went bankrupt. Even senators were forced to auction their estates. The empire had discovered a painful truth. Money isn't just metal, it's confidence. Tiberius eventually stepped in with an early version of a bailout. 100 million sesterces lent at zero interest to stabilize the economy. It worked, but the scar remained. Rome had learned that even an empire can be humbled by the invisible forces of finance. And yet, this fragile system helped Rome grow bigger than any civilization before it. Tax collectors in Gaul could send revenue to Rome in days, not months. Soldiers on distant frontiers were paid reliably enough to keep them loyal. Massive infrastructure, roads, ports, aqueducts, was funded by wealthy investors expecting returns. Rome wasn't just conquered by the sword, it was financed into existence. But as the centuries passed, the system began to rot from within. Coins were devalued, silver content dropped, inflation soared. The trust that once tied the empire together slowly frayed. Families who had built their fortunes on lending now hoarded their wealth. Trade slowed. Taxes became unbearable. And when Rome's borders were finally tested, its financial foundations were already crumbling. An empire built on trust died from a loss of it. 2,000 years later, our world feels bigger, faster, more complex. We have digital dollars, central banks, instant payments, global markets. But in a way, nothing has changed. Our systems still run on invisible promises.